Hello and welcome to the Gray's new video channel, and in this first video what we're going to do is I'm going to take you through the basics of doing binary option trading. Now we're on a website at the moment. We're in the I've got my account loaded up. We're in demo mode at the moment because I'm not very good at multitasking as regards to making a video, talking, thinking, explaining things, and then also trading with cash. So what we're going to do is we're going to trade with a demo cash. Now our demo cash is $10,000, so we're going to be trading with that today. And what I'm going to be showing you is basically the basics of how to do trading and how to hopefully get some winning trades whilst doing binary options. Now what we're going to do first of all is just go through some basics. I've loaded onto a free account, so I've created a free account with a binary options website. Any binary options website will have a similar interface like this, where we've got a graph which is showing the changes in prices, and I'll cover that in a moment. On the left hand side here we've got some menu items, which again I'll cover those shortly. We've got some menu items on the right hand side. Now these menu items on the right hand side I would just get rid of, because they're there really to distract you. So if you can get rid of them, then that would be really good. So if you can shrink them out of the way and just ignore them, that would be great, because they're just there to distract you from actually doing your proper trading and trying to work out what your next trade is going to be. Then at the bottom we've got very much a quick summary of what this chart is showing us at the moment. And obviously we've got two options, hence the term binary. We can make a choice here. You can see this blue dot here. This is telling us what the price is at the moment, and as you can see it's moving up and down. And what we can do is we can make a decision between the blue dot where it is now, and as it arrives to this line here, we can make a decision about whether in the time that the blue dot takes to travel from here to here, will the price have gone up or gone down during that time. So those are the choices we've got. We can go click the red button to go down, or we can click the green button for the price to go up. And hopefully that will all make sense in a short while when we go through the actual trading. So first of all, at the top here you can see here we've got some timestamps. So we've got the first one here is the time until you make a purchase. So we've got 20 odd seconds to make a decision about when we can make a purchase, and then once we've made that purchase we've then got this amount of time to make a decision about whether we're actually going to make a profit. So for example, what I'll do is I'll just click the up button here. So I've made a trade now, or I've made a guess if you like, that I think that the price is going to go up during this time period, and you can see here that that's the time period flag. So what we're going to do is just wait to see what happens, and I'll move my mouse out of the way and we'll just see what happens over the next few seconds. So what we want it to do is to end up being higher than that green line. So we'll just wait a few more seconds, and there we go. So we actually won that bet, which is great. So we're going to continue demo trading, and that won us about $200 worth of demo cash just doing that trade. But in all honesty, that was a guess. I was guessing whether it was going to go up or whether it was going to go down. And obviously if I'd lost that trade, then I would have lost the amount that I'd bet, which was $302, which you can see that's the amount here. Okay, so how are we going to actually set up our trading patterns, if you like, so we can stop guessing and start making an educated or an informed decision about what that trading is going to be. Excuse me. Well, if we come up here to the left, we've got a series of buttons, and what I'm going to do is just going to spend a little bit of time in explaining how we can use these to help us with our trading. Now the first drop down button, you can see here where it says AUD and CHF. That's basically the Australian dollar against the Swiss franc. So that's the price that we're looking at the moment. Now once I've clicked that button, we've now got a huge list of possible trading currencies. So we've got the fiat currencies here, so this is standard currency, so our dollars, our euros, our Australian dollars, our British sterling. The fiat currencies that are around the world, you can see here that we've got all those options, and if we wanted to choose a different currency, so for example if we wanted to do let's say the euro versus the Australian dollar, if we click that, we can see now that this chart has changed and we've now got the euro and the US dollar, and so the trading pattern has now changed. If we now come back up here, we've now got another option. Sorry, just to explain what the percentages are in this column here. So the percentages are giving you your ROI, so it's your return. So at the moment you can see here that if we were trading the euro and the USD, we've got the potential of making an 89% return on whatever it is that we're trading with. So obviously if we traded with $100, then we'd expect to get our $100 back plus $89 as profit. As an alternative here, you've got the euro against the British sterling. You can see here that we've only got a potential of making 26% return, and these percentages will change, they will fluctuate depending on what's actually happening in the marketplace. So if we click on this one here, which is the euro and the British sterling, and then look at the screen, so you can see here that for some reason there's quite a lot of movement in this price at the moment. So I would imagine that there's been a lot of profits being made by traders, and because of that this website has decided to sort of make the ROI, the possible return or profit that you could make on a winning trade, as small as possible to deter people from actually trading this pairing. Whereas ones which are probably the company are making lots of profit because people are losing trades, then you can see here that the ROI is 96%. So if we click on that one for an example, this is the one that potentially people are losing money on this at the moment, so they want more people to come and effectively risk their trading on this particular pairing. So that's how those columns work. The little stars that you see here are that if you want these to be your favourites, so if you want to keep referring to them, you can click on the little star and you can see that it appears at the top. So if we come out of here, we can now click on these and it takes us directly to those charts. Okay, so if we like that, that's great. If we don't like it, then obviously we can click to remove those. So that's the fiat currencies. What we're now going to look at is the cryptocurrencies. So cryptocurrencies work exactly the same way as the fiat currencies. It's just looking at a cryptocurrency against a dollar, against the actual fiat currency of dollars. So for example, we've got Bitcoin here. So if we click on Bitcoin, you'll see here that we've got the Bitcoin price, and if we scroll out of this, you can see that the chart gets smaller and smaller, and you can see more and more data over the past well, it's got running from 8:15 my time up to about 8:45, so it's a good couple of hours, good couple of hours of information there. So again, those are all the cryptocurrencies that they're trading at the moment, and you know, again, they will remove some of these. You can see here that we've got Expanse and we've got Sonero and Gridcoin. They've been switched off by the website at the moment, and that could be for a number of reasons. It could be a technical issue, it could be a connection issue with the Gridcoin price. It could be any number of reasons as to why it's been switched off. But what you'll find is that they get switched on and switched off over time. So if you need to come back in and you wanted to trade Bitcoin and unfortunately it was switched off, then perhaps if you came back the next day, then you might find that it's active again. Okay, so that's cryptocurrencies. If we now go to commodities, you'll see here that we've got Brent oil, so we've got UK Brent, we've got US crude, we've got silver, and we've got gold. Now where you see the OTC, that stands for over the counter, and that effectively means that the price is being traded whilst the official US crude market has closed down. So if we come back to currencies, you can see here that we have a regular currency market, but when the currency markets close, then it switches from Australian dollar to the US dollar to the Australian dollar, US dollar, and the OTC. So that is explaining to you that it's not an actual market, it's what's called an over-the-counter or an out-of-trading hours market. So as you can see, again, if we click on UK Brent, you can see here that we've got a similar sort of pattern with the prices going up and down. And so we've done commodities, done crypto, and we've done currencies. And then the other one is stocks. So if we click on stocks, you can see here that these are share prices on your more popular companies. So for example, you've got Facebook, American Express, Gazprom, Intel. So again, it's exactly the same information as regards to what you're looking at here, and obviously you've got the opportunity to trade IBM. You can do that now, okay, and then you've also got the opportunity to trade over the counter. So obviously once the market is closed for Bank of America, you could click on here and you could still trade the Bank of America through the over-the-counter prices that are coming through. Okay, so that's how we choose our commodities. Now what I'm going to do is I'm going to choose, I'll stay with Bank of America for now. Okay, so we'll leave it on there, and we're now going to move over to the next box, which is the actual chart types. So at the moment we've got what we would call a mountain. So this looks like a mountain range, and obviously you've got coloured here at the bottom and not coloured at the top. So we can change the chart type. We have the area mountain, or we could have a line mountain, which is just simply the line. We could choose to have what's called candles. If I just change that to 1 day, there we go, just change it to 1 day candles, and I'll explain what they are. That looks a bit busy. Let's see if we can change it. There we go, to something like that. So we've then got candles, and I'll explain what those are. We've also got bars, and we've also got Heineken Ashi. Okay, so again, I'll explain a little bit about what Heineken Ashi are shortly. So let's go back to the area. Now all this is where that line is. That's the current price at this moment in time, and obviously as the price changes, then obviously that little blue pulsating dot will obviously change and move as things happen. Now you'll notice that it's stopped moving, or it seems to be stationary, and that's because I've changed the time scale that we're looking at. We're now looking at 1 minute time scale. If we come to the line, again you can see here we've got same shape, but obviously we've missed the bit that's in the middle. That's now been taken out, and you can see here that pulsating dot has just risen up a little bit there. And now let's go to candles. Now what we're going to do is we're going to go to candles. I'm going to choose one, I'll go for 1 hour candles, okay, and what I'll do is I'll just explain how the candles work now. So I'll just scroll in. Now first of all you're going to notice that there are two different types of candles. There's a red candle and there is a green candle, and we call them candles because there is a wick that's obviously coming up the top and obviously at the bottom, and hence the reason that they look a bit like a candle. Now the difference between the red candles and the green candles is that the red candle is showing you where the price has gone down during the time span of that candle. Now you'll remember that we've set the time span of this candle to be 1 hour, so you can see here where it says H1. So the candle here is the time, has the time span of 1 hour, and it's what the price has done during that hour. Now obviously if we go in a little bit closer to this, I hope to be able to explain to you what has actually happened. So if we take this red candle as our starting point, at the end of this hour, okay, so this candle here, the price finished just here at the top. You see where it's filled? So we've got this big green rectangle here, but at the top of that rectangle, that's where the price finished at the end of that hour, which means that in the next candle, that's where the price started. Now during that time, during the next hour, the price dropped and it finished here, okay, at the bottom of this rectangle. So it created a red rectangle. Now during that hour, the price actually rose and the price also fell even further, but then came up again. And how do we know that? Well, we know that because of the wick. So what happened here in reality is that the price started here at the beginning of the hour. What possibly happened is that the price continued to rise up to this point at the top of that wick, and then during the course of the hour it then started to fall again, and then came down to the bottom wick here, and then before the end of the hour it then rose a little bit to just finish there, and that was the starting point of the next candle. Now again, during this hour the candle did fall in price. You can see here that that wick came down here, but then during the hour although it came as low as this, it also rose all the way up to here before resting or coming to a stop at the end of the hour at this point here, and then started the next candle here. So the reason that you've got those wicks is because you have to know where it started and where it finished, and obviously if it goes higher or lower than those prices, then that is what's creating the actual wick that we're looking at. Okay, so you can see now that the price rose here in this candle, it then fell here, it then rose during the next hour during that candle, and fell back, then there was a small rise, and then the price came down a bit, another small rise, came down and came down before 3 candles of price increases. And then after that, if we come over here, you can see that there was then a period of falling prices. So that's how candles work. If we just zoom out, you can see over time, you can see that the green candles obviously are going to be generally where there's an increase in price overall. The red candles obviously is where the price is going to fall back. So you get green candles where the price goes up, red candles where the price falls down, and you can see that markedly here, and then you can see red candles mostly here, and then you can see rising green candles, and then we're going through a period of falling prices again just in this point here. So that's how candles work. Now the next one on the list is bars. So if we click on bars, they look similar to candles, but as you can see, instead of having wicks, they've effectively been given much more solid, I suppose a top or a much more solid bottom. So they absolutely operate the same way as the candlesticks that we've just been looking at. So if we look here, for example, we've got a green candle. Okay, you can see here that this is the price where it finished, and obviously the price then moved from here. It finished higher than the low point here, and then the next bar you can see the price also fell, and then the price actually then went up during this section here. So it's less clear as to what's actually happened with the prices, but you can still see that there is a pattern between the reds and the green bars. And then if we come over to the Heikin Ashi, if I click on those, these are incredibly similar to the candles. The only difference being is that generally we don't have the top part of the candle, and then sometimes we don't have the bottom part of the candle, and that is when there is sharp price increases or sharp price drops. So you can see here where there's a sharp price drop, you can see at the top of the wick is missing, and here where there's a sharp price increase, the bottom of those wicks are missing. So it gives you a little bit more detail as far as that's concerned. Now for our purposes we're going to stick with the candles, and so quite happy now that we understand that the price is going down when we see a red candle, and the price is going up when we see a green candle. Now that gives us some sort of pattern, but it doesn't really give us a signal. So what we're going to do is we're going to incorporate indicators. So we're now going to click on the indicators, and as you can see there are a huge array of different indicators. Now the first ones that I'm going to talk to you about will be where are we? Moving averages. So I'm going to click on moving averages, and we're going to add the moving average, and you can see here that we've now got a line that's appearing in between our candlesticks. Okay, now that line represents the average price of the previous candlesticks, and you can change the number of what that line looks like by editing it. So at the moment it's looking at the past 10 candles. So if we want to change that, and what we're going to do is we're going to change that to 14 candles. Sorry, we're going to change it to 21. Okay, and we'll click save, and you'll notice that what's happened is that that line has effectively smoothed out a little bit. And again, just to show you that a bit better, if we come to edit that again and we change it to, let's say, 40, click save, you see now that that line is a lot smoother, it's not as jagged. Excuse me. And again, it's just looking at the last 40 candles, and it's providing you with a much smoother, what's called a simple moving average line. Now the traditional indicator for a smooth moving average is, normally we have 3 lines. We've got 200, let me see if I can change this better, sorry, 200, okay, so we're going to save that. So you can see here, so if we, there's the 200, we're going to just change that now. We'll probably change it to a 100 instead, just so we can, it's easy for me to show you. Put it to 100, which gives us a bit of a bigger line, and then you then add another moving average. So if we come down here, add another moving average. Okay. And I've added 2 there for one reason. So we're going to grab that one, and we're going to change that one to 50. And we're going to change the colour to red, and then we're going to click save. Where's the the other one gone? Oh, I do apologise. For some reason I added the wrong one. There we go. Let's just do this one again. 100 and then save. There we go. Okay, so what is this telling us? We've got our 100 SMA, our smooth moving average here, the green, and you can see that it's quite nice and smooth. It's just gently going up and down. Now when the line is going up, we're then looking at an uptrend. Okay, so that's when we would be trading an uptrend. Also, we've got our 50 here, our 50 moving average, which is still moving up and down nice and gently, but it's moving a little bit quicker than the green, the 100. So as you can see, the green then levels out a bit and then starts to drop. Okay, so you can see that as the price drop, as the line drops down here, that you can see that the actual price has also dropped. Now the problem is that this indicator here is telling us that the price is dropping, but the price has already dropped here, so we've actually missed the opportunity to trade that price drop. Now we can use the 50 to help us trade that, or create an indicator where there's going to be a possible trade, because as that line crosses the green, then that would be an opportunity to make a down trade. So you can see here that if we'd started trading as a down price, i.e. clicking this red button, we'd have possibly made lots and lots of winning trades on this down cycle. Okay, but we would then have possibly have missed we'd have probably lost this trade, but we could have also now, because the red line is still below the green line, that we could still, as you can see, be making profit from down trades. But the problem is that we had the opportunity to make some down trades here and possibly make some profit. So we could do with having a look at a third SMA that's even shorter than the 50. So let's have a look at adding that one. So if we come to here and we add a third SMA and we make that one, let's say we make that a 20, okay, and we change the colour of that to purple, okay, and we click save. Now you can see that we've got the opportunity here of much more reactionary price lines. So you can see that as the price here falls below this 20, there's an opportunity to now make some down trades. And again here, as it crosses this red, we've got a stronger signal that there's going to be more down trades, and as it crosses the green, we absolutely know that there's going to be some down trades, and that is a great indicator for us to use. Now you can see historically how that's happened, but now you can see in the future what might happen as this purple now starts to kick up. Is it the possibility that we're now going to see that purple cross over the red line, which is giving us a warning sign that the price might still be going up, and then once it comes into contact with the green, then we might be starting to trade some up signals and start to trade strongly with this green box here. So that's one way of using the indicators. Now it's not my preferred way, so let me just get rid of these indicators. Let me just open the window because I'm getting a little bit hot here. There we go. So it's some unseasonably warm weather we're having over here. Now what we're going to do is we're going to delete all the indicators now, and what we're going to go with is Bollinger Bands. So I'm going to add a Bollinger Band, and what I'll do is I'll just explain what the Bollinger Band does to begin with. So let's just zoom in a little bit. Now, the way the Bollinger Band works is that you'll notice that we've got three lines. We've got a green line at the top, a blue line in the middle, and obviously a green line at the bottom there. Now the Bollinger Band, effectively the blue line in the middle is an SMA, so it's very similar to the SMAs that we've just been talking about. So that is giving you the average price over the previous candles, over the time period of the previous candles. However, what the Bollinger Band helps us identify is what's called a reverse signal or reverse movement. And what the Bollinger Band shows is that as the price starts to hit the lower band, okay, it wants to do one thing. It wants to get back into the middle of these Bollinger Bands. And then when it hits the top Bollinger Bands, it wants to do something else. It wants to come back down into the Bollinger Band. What we need to do is create a Bollinger Band width that meets these candles so we can see what those indicators are. So if I click on here, we go to current and we go to edit, what I'm going to do is I'm going to change this time period to, let's say, 15, and we'll keep the deviation at 1.5. That's a simple calculation based on how wide we make the Bollinger Bands. And then we'll click save. And what we now see is a little bit, let me just go to a different currency. Let me go to cryptocurrency. Let's go to Bitcoin. Okay. Or should we go to a different currency? NEM, won't be any better. That one might be a bit better. Right, we'll go with this one. And let me just, okay, so now we've got slightly wider bands, but what we don't want to do is just make them a little bit wider so we can get them to come around here. So there's a couple of ways we can do that. We can either increase the time period that we're going to give them, or we can increase the deviation. So what I'm first going to do is just increase the deviation, see what that does. There we go. So we've now got, you see now that as the price drops down here, it comes out of the bands and wants to go back in. Okay, so, and again, as it comes to the top here, it's going to want to come back in. And if we scroll over here, you can see that as the price comes out of the top of the band, out to the bottom of the band, it wants to go back in. Here, comes out of the top, wants to go back in. So as the price comes up here, if we know to make a down trade, we should win that trade here. Now if we change our time period from 1 hour to my preferred method, which is 1 minute, okay, you can now see that we've got some opportunities to start to make some educated trades, and hopefully we can start to actually start to make some possible trades that we're going to make us some money. So if you see here, we possibly would lose here, but we would have won here, and we would be winning here. So what we're going to do is we're going to have a look at some currencies to see if we've got the opportunity to make some trades. So we'll have a look at that one, and I'll show you how this system works in actual practice. Bitcoin. There's not much activity in Bitcoin. We'll have a look in the fiats, because the fiats generally jump around quite a bit. Let's have a look. Okay, this one looks like it might be quite good. Okay, so we can see here that the price is just on its way up here, So what we're going to do is we're just going to wait patiently, hopefully, for this price to come up, and then obviously if it does come up, we'll then start to make some trades. It's gone level there for a moment, so while it's bobbing around, we'll have a look at some others. So I'll keep an eye on that one. Look at this one. This one looks quite good. Look at this. Okay, so I'm just going to change the indicators on this slightly, just to give us a chance to make some regular trades. Okay, so we can see that the price has gone up there. Okay, so what I'm going to do is I'm going to wait for this timer, and I'm going to make a down trade about now. Okay, so what I'm doing is I'm hopefully going to just make sure everything is all in line. Got that okay, got that there. So hopefully we're going to we'll make a profit. Now if for some reason that turns out to be a loss, what we're going to do is we're then going to just simply make another bet again straight away. So we'll just wait for this to clock through. So you see at the moment I'm not making any money at the moment, not making a profit. Just got a few seconds to go. What I'll do is I'll come over here, get ready to make a down bet. Now, okay, so I lost that first one, but I'm hoping that the price has now been out at the top of that candle for a while. It possibly wants to come down. I might just mess with this Bollinger Band a little bit, just to see if I can get a more accurate signal. Okay. So it looks like we might lose this one as well. So we've just got a few seconds here to go. You see this countdown here. And what we really need is this candle to be a red that comes down. Okay, so that wasn't any good either. So what we're going to do is we're going to really up the ante. We're going to go with a down trade again. You can see here it's hit this top bit here. So hopefully it might want to come down a bit, might get a bit scared as it were. Just got a few seconds to go. Last 10 seconds. Ooh, look at that, we missed it. Let's just have a look at the other one. Let's go with a down trade there. So hopefully we can get something to recoup our funds here. I didn't save that other one, did I? What was it? Is it that one? Let's go with that one as well. So look at this one. See how it's getting really close to this top of this line? So I want to keep an eye on that one. You see at the top here, this one's trading. At the moment it's trading as a profit. Let's just go over to that one to see how that goes. Last few seconds, and we've won that. So that's made us about $900, which isn't bad. Let's just keep an eye on these, just see what. So what I'll do is I'll just keep bobbing between these three charts, just to see how we're doing. So we're going to a bit of a flat period here. This has come down. So last time it's come down into the middle. It went back up, didn't it? As you see here, dropped and then shot up there. Oh, we want to go down here. I think I went a bit early there. Anyway, I'll not worry about that. To go big with this one. I'll go with 1,000, I think. Last few seconds. And we're going to go now. So I placed a trade there for $1,000. Just check the other ones. Oh, we'll go up here, and we will not do anything here. Okay. So let's just check this one. Okay. Oh dear. Right, we'll put another 1,000 in there. Seems to be jumping all over the place, this one, doesn't it? Okay, so these are looking okay, but the price is flying around, as you can see. And there we go. That should do nicely. We've made just shy of £5 grand profit there. We're going to take an up trade here. Okay. And this one here we're going to keep an eye on. This one here we're going to go down on. With that one, but we'll see how that one pans out. And this one here is not so good, but we'll see, because I'm going to make profit in one of them, and we're going to lose on two of them. See this one here, I'm going to look to place an up trade in about 20 seconds or so. calculations for. Ooh, just missed that movement then. Just missed that downward movement there. Do an up trade here in a moment. Oh, missed it. I should have got in just here. Okay. And again, we've got an opportunity here that's going to leave alone for now. Just see what else we've got currency wise. Have a look at cryptos again. Ooh, look at this one. Let's get into there. Okay. What else have we got on cryptos? Oh, there's another one there. Look at that. Missed that one there, didn't we? That one. Let's have a look at what else we've got. Metaverse, that's usually quite a good one. EOS, let's get in there. Oh, we missed that. So we've just done a quick double. This one's all over the place, isn't it? Let's have a look at this one, see how we get on with this one. Last few seconds on this one should make us $2,600 profit, maybe. Yeah. Oh, we made 5,200 profit on that one. That was quite good, wasn't it? I like that one. Okay, let's see what else we've got. Let's go back through these cryptocurrencies. This one's going. Let's keep an eye on this one for a bit. No. Let's see what else we've got. Steam. Got Syscoin. Syscoin, what's that like? Let's make a speculative trade there. And NEM, what's happening in NEM? Bitcoin. Bitcoin looks like it's all over the place at the moment. Ethereum. Golem. Litecoin. Stratis, Filecoin, Primecoin. They all got very similar patterns, haven't they? Okay, so we've just made another 2,700, which is nice. nice one. See how this candle's dropping. Let's see if we can see if it'll drop again for the next 30 seconds or so. Oh, it's gone up. They can move so quickly, some of these prices, can't they? Doesn't look like it's going to drop anytime soon. Oh, look at that. There we go. Let's go in there. Right, hopefully that goes up in price. Let's have a look at these. Anything happening? Go there. This one here looks interesting. I'd like it to just drop a little bit. It's not, so I'm just going to go with an up there. It's gone a little bit down now. Look at the others. Let's have a look at stocks. Let's have a look at Facebook. No, Google. Oh, Google looks good, doesn't it? Let's go for a quick profit take there. IBM. Oh. Okay. What else have we got? Lukoil. Silverbank. Okay, so just made another $1,600 there. Home Depot. Gazprom. Let's see what comes of all those little bits of trades then. Well, we've just made 3,700. That's not bad at all, is it? Quite like that. Let's just stick with Apple. Let's see what happens with Apple. That's going to come down, is it? I think it's on its way up. Come on, just down a little bit more. I don't think it's going to, is it? Nope. Oh, that's a shame. Right, let's have a look at what else we've got out there. Let's just change this to 500. commodities. So we haven't had a look at silver yet. Oh, no, silver's doing nothing. US crude is doing something. Let's have a look at this. It's about there, but that's the high, recent high. So will it go as high as that? Might do. I'm going to take a punt on that there. Okay, we've just made another $1,800 there, which is nice. So that's a UK Brent, gold. Back to cryptos. Let's have a look at cryptos again for the last 5 minutes or so. This looks like it might be interesting. Gone there because it's sort of around about here, isn't it, where it's low. So hopefully it'll go up in price again. Okay, I've just earned another 980, which is nice. I'll take that. Just take that for now. Just keep an eye on this one. See how far this one will go. Go again. Dear. It just keeps going, doesn't it, this one? See what else we've got for the last few minutes. See if we can get rid of all of our demo cash. Last one. There we go. Here we go. Right, let's do this one for 3,000. See how we get on with this one. And there we go. We've just made another $1,500. So hopefully you've now got a really good handle on how binary options work, and you can understand the system that we use in using the candles and the time periods and obviously the Bollinger Bands. Hope you found that useful. what I'm going to do is just going to place one more bet because I can't quite help myself. So I'm just going to do one more here, and we'll see how we get on with this last one. It's only got a few seconds to go. Will we actually get there? No, it doesn't look like it's going to happen, does it? Doesn't look like we're going to get that winning bet. That last trade's not going to win, I don't think. Still moving around, isn't it? Last few seconds. Ooh, so close, so close. Oh, there we go. There's one in the end. So I won 1900 in the end. Okay, so hopefully you found that interesting and useful, and you can now use that information to go off and trade binary options for yourself. Take care. Bye bye.